The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, David White. It is a wonderful day down here at the headquarters of Technical Trading and Investing, TFNN.com. And, of course, we've got a market, what can you say? It's up 4 points on the S&P cash, 1.6 billion shares. And as usually, not really, but I'm going to start making it usual, we bring in a musical guest to actually comment on how the market is doing. Oh, the talking heads. On the road to nowhere with 1.6 billion shares, up 4.5 points. So we've gotten into extremely light volume. Of course, you could almost say that about summertime trading, but you should have volume at least in late Tuesday, Wednesday, Thursdays, even if you're going to have no volume on Fridays and Mondays as you go through the summer. We certainly don't have that. We saw a lot of these stocks try to push higher. I'd say 90% of all the index movements right now are probably driven by Apple and Apple News, up almost $10 today. And you can be wrong, right on the market, wrong with Apple in it. And I have not put on any index positions so far, but I think that there are some positions that I put on that are kind of synthetic puts on the market. And they're doing okay today. So I'm not all worried about much higher prices. We might get another 5 points higher in the S&P cash, but for me, I think the next 3 or 4 days, they're just going to try to hold this thing up into fund buying. But to tell you the truth, I just don't get a lot of energy there. Trim tabs does not show a lot of money coming in the market. Just the opposite. As the market continues to go up, a lot of these funds have some kind of charter where they'll always have 50% of their money in bonds and 50% in equities. Well, if they have a huge run in equities, suddenly they got 65% of their money in equities, and they have to go sell some of their equities and put it in bonds. And when people really wonder about how the bond market is really going up, to me, that's it. You basically have a market that's totally out of kilter because of financial engineering by the Fed. It's gone way too long. They've recognized it. They are trying to put out warning signs that say we're going to raise interest rates next year. I'm trying to remember how long it was, probably a good 3 months or 4 months of getting random hate emails about how the QE would not come off. I endured that from my faithful listeners. In the end, I was right on that one. I have a feeling that I will be right on this one too, and that we're looking in January or February for higher interest rates. They've pretty much announced it. They're going to look at it, and I think that we see just the huge problems caused by their financial engineering. A pound of tomatoes in Brazil cost a dollar a couple of years ago. They now cost $6. We now see huge disparities of just what food companies are worth because, of course, while we haven't had rampant inflation in some sectors, food has been one of them, and it doesn't look like that's coming off. We're seeing some really astronomical bids for some of those food companies today. What's this, the third bid up in as many days for Tyson? And we are going to continue to see that problem, which is a high demand for bonds because people rolling, at least a lot of these hedge funds, rolling out of equities. And every time this market moves higher, it's lighter volume, and they are able to sell their additional percentage of their portfolio into the bond market, or I mean into the equity market, put it into the bond market, and there's going to be quite the snapback at one point when this does fail, and I think the Fed already recognizes that. I think that there's a lot of people that love being able to sell at the highs, and they're going to let this try to go on as long as possible. But, we've got 1.65 billion shares at 1915 on the S&P cash. And again, I'd say 90% of that today is out of Apple. And we'll have to see. We got the IBB basically flat. A lot of these other indexes out somewhat flat, somewhat lower. We're going to be going through some of those stocks moving today. Anyway, as always, we like to start off with a little bit of history because you're doomed to repeat it if you don't know it. In 1946, with stock market still euphoric over peace, the Dow Jones Industrial Average hit immediate post-World War II highs of 212.50. This is, of course, in 1946. Today, in 1946, a level it will not surpass again until April 12th, 1950, nearly 4 years of chronic doldrums. Basically, it hit highs. Most of these stocks had hit pretty long-term ability to generate any more additional earnings, and it was into the 50s before the market picked back up again. I'm wondering if we don't have something similar where we could have 4 years of wild trading inside a market without a index, maybe ranging from 1400 to 1900 over a matter of years until we catch up with the levels that a lot of this market has. Many of the people in Wall Street, many people on CNBC will say, well, the earnings are great, they're great, they're great. And the answer correctly is, but they are great because interest rates are low. If you took away and let the interest rates basically float to their true levels, you would see that 1/3 of the entire S&P earnings would vaporize in 1 second. They would be gone. We'd be making about 65% of the money that we were making at true interest rates, or true market interest rates. And that is the question of how long will this market go sideways? Will they try to give us 4 years of chronic doldrums, or 10 years in the case of Japan, where nothing is actually happening except the incredibly long hangover of far too much QE and far too low of interest rates? Well, we shall see. I suspect the market's going to snap. The reason why, and I brought it up many times before, is the Dodd-Frank regulations. They say that you have to be able to put what is known as money at risk. Money at risk is a way, or value at risk, excuse me, is a way of measuring how much cash you have at risk. And part of that is that you need to have stocks that are not extremely volatile. The higher volatility in the market, the more you have to sell shares off to make sure that your leverage compared to the volatility of the market is lower. And as we see the VIX continue to drop, that is nothing more than the market wanting to make sure that there is no volatility, no trading levels, so that they can put more and more shares in the hedge funds underneath those Dodd-Frank regulations. So there's always a way around whatever the politicians are going to try to give Wall Street. Wall Street's always probably 10 times smarter than the dopey and paid-off politicians. And I'm not going to say that Frank and Dodd were both dopey. I just think they don't have a clue. I don't think that they, you almost have to have somebody that's had 10 or 20 years on Wall Street to know just how many ways they can fool these guys in politics. And there's always a way around it. There's always a reason for them paying that money and funneling it to politicians to get one word changed. And in this case, they couldn't change the words, so they changed the way that the market worked. And I think that's why we're seeing this low volatility. What would happen if volatility, was say measured by the VIX, went from 13 to 20 in a matter of a couple of days? How much of the market would have to be sold to keep these companies underneath the Dodd-Frank regulations for value at risk? And why there's not an easy answer, I think you could say that they would have to sell up to 10 to 15% of their holdings. That would probably relate into 30% lower in the market, which takes us right back to where I think the market is, or where the fair market value is, as long as people were paying the fair rate for interest rates. So I'm going to say that I am mildly bearish, but I'm only bearish in the fact that I'm waiting for stocks to come back to the mean level of earnings based on a market rate for interest, not on a Fed manipulated version of that interest. And that pretty much starts the day with our history and my opine for today. I am wearing headphones if you're watching on Tiger TV. Normally I have a couple of earbuds in. I don't like wearing the earbuds at all, and I'll give you a reason in a minute. But I've got a great set of headphones on. We've talked about it before. Apple has bought a company that's basically 85% of the money coming in, or 90% of the money coming in, is based on some very cheap, their manufacturing costs, depending on the model, is somewhere between $15 and $18 headphones that they sell for just about $200. I've had great headphones since I really became one of those guys that had the super expensive stereo system in the basement and the very, very expensive speakers and all that kind of stuff. I enjoyed listening to vinyl as long as it lasted. But I always had some great Stenhauser headphones. Today I'm wearing my Bear Dynamics. There is a few reasons why I'm going to bring up the design of these that I think it's going to be important to Apple in the near future. But what these Beats headphones are, if you've ever put them on, are basically like regular cheap headphones, except the bass turned up hugely, just massively, because, of course, there's not a lot of music in true musicality to rap or hip-hop. It's pretty much on the bargain basement level of music. And so people aren't listening to it. They're basically, if the voice is discernible, there's a huge wallop down on the bass line. They love them. And I'm going to tell you why that's going to be problematic for Apple in the long term. But we shall return in just a minute. Anyway, you can give me a call at 8.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, Visit the front page of TFNN.com.
Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So as we come back, Apple, big move. Of course, they've got and are beating the drum about new products that they have not announced yet. Of course, this the biggest acquisition Apple's made in a long time. I don't think it's going to amount to a great deal. Maybe some of the other products will. But I think on the face of it that they are buying Beats to buy cool. The guru that they had died. They put the CFO in charge of the company. And he really doesn't know or feel the heartbeat of the young adult consumer, which is what Apple really is going after. The people that want to buy for conspicuous consumption. And Apple and Beats has basically done a very good job of that. Now, it's not going to, the headphone business is not going to be a drop in the bucket to Apple. The idea is that Jimmy Iovine, who is basically pushing the streaming music part of their business, is going to be able to break through the clique out there in LA and get all the 4 major record labels to cough up access. Now, the problem is that, first of all, I don't know why Apple's getting into that business other than I think they have to be in it. To this date, nobody's made a dime streaming music at all. Nobody ever. It doesn't look like that's going to change anytime soon. The artists will probably, or the artists are absolutely, they hate Apple for what they did with iTunes and how they broke up the ability to make any real money from recorded music. You can have $1 million seller and make $100,000 this year. You would have made $2-3 million years ago. So the whole idea that Apple is in love, or people are in love with Apple. Probably true if they're the person buying it, not if they are the artist trying to make a dime out of it. The idea, I think, was Jimmy could get around all these folks. At least they think he can get around 3 of the 4 major record labels. The problem I see is that even if they do, and even if they pay the artist nothing, as almost all of them do now, I think I saw a deal where some artist was played 1 million times and got $384. And that was for a year. It was actually a fairly decent artist. But my guess is that $384 went about 2 hours worth of recording studio time. So I can't imagine that they're making money then. Now, maybe they can make money on the concert tour, and maybe better than they were able to, mostly because the people that wanted a cut of this, that used to be managers, are gone. But to me, it's kind of one of those businesses that I just would stay away from until someone figures out how to make money. For 30 years, it was a loser to be in the airline business. You were just waiting for them to go bankrupt. They've kind of figured out after 30 years how to make money, and I have a feeling that someone will one day. But to this point, I don't think Apple has. I don't think anybody else has. Now, Beats does have their own streaming music service. They were able to pick up one of the companies that would have nothing to do with Apple because Apple screwed them over in the iTunes business. So I think Jimmy Iovine is going to go after the third. They'll still need the fourth. And I think this doesn't even get them across the finish line yet in streaming audio business. But just look at charts of companies like Pandora. Spotify probably hurt the worst by this because they haven't been able to go public and get out of the shadow of Pandora, who has a lot of cash to go against them. But what I wanted to bring up before this breaks, and we'll get into some charts and movement of the market, was that one of the things I think you need to worry about is lawsuits eventually arising for using the headphones of Beats. Beats uses what's known as a closed headset, and you can't hear anything outside them. That level of air pressure on your ears over time can and does hurt them. And I think you might be able, or we may be able to see lawsuits down the line from Beats and others. I know they've done a lot to make sure that the audio levels in the earbuds don't go very high on Apple. And I think you might see some changes in that also from Beats. But, we will be back in just a few minutes. In the meantime, give me a call, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex.
Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And I had a question in the den from John in Philadelphia. He says, please explain Beats co-founder and how he is a guy from Interscope, and basically talking about Jimmy Iovine. I think that's how you pronounce his name. He was on American Idol for a number of years as, quote, quote, one of the mentors. And probably the biggest thing I remember about him was him trying to force Philip Phillips into being somebody he was not. He was going to dress him all in leather and slick him up and make him wear his hair long and be everything that the guy was not. And it was kind of interesting to see 3 weeks of Jimmy telling him how to be a plastic banana, good time rock and roller, and not be authentic. Of course, basically he said, oh, sure, and didn't do anything that Ivine want. And actually, he's had a pretty decent career after Idol so far anyway, probably one of the better ones since a couple of the first seasons. But even Macklemore wrote a rather scathing indictment of Iovine in one of his records, even though he's never met him. Macklemore knew enough people that had done business with him to know that you were basically going to end up with nothing. He's a very, very smart businessman, but he is more than worried. He's not really into the music as much as probably into making stars and making a lot of money and making a big splash. And I think he'll be a good fit over at Apple. I think he, like he said, he's a true corporate guy. He kind of is, but I think he's more in the corporate kind of guy that Jobs was, which is almost not psychopathic, but I'll think of the right word. We're going to go to Sam in Irvine, California. How are you doing today, Sam?
Hi, Dave. Thank you very much for taking my call.
So what do you want to look at today?
I like about ANV.
Mm-hmm.
I own this stock, and I own it at a very high price, and it's going down. I want to know about the fundamental of the company and see if the company can sustain staying in business during this predicted correction that you anticipate.
Well, I'm going to tell you that I'm not the expert here at TFNN on gold stocks, and probably recommend that you talk to Tom on this one because he goes through the books on them with his gold report. So I'm going to give you that caveat. What I'm going to tell you, though, is if you can't make money with gold at $1,300, you're in trouble. And to me, a lot of these stocks look like they're going to have problems staying in business. And I'm looking for gold to go back down to that 1180 level yet again. And during that time, the question is just how much money do these guys have? Let me see. Let's take a look at their balance sheet. But again, I'm going to say you probably want to call Tom later, maybe on tonight's show, and ask him about it. Yeah, they actually had a little bit more cash going into 2012, 2013, and they're kind of burning through. It looks like they could be out of cash in a couple of years. So the question is just how long can these guys continue with gold at $1,200? And, the wheat, this is where you're going to separate the wheat from the chaff. And these companies are going to be bought out on dimes on the dollar that aren't doing well now and well financed and or hedged. And the energy down from this last leg up to the last leg down, pretty much the same. And I can't see this thing really bottoming out until we test that probably 1180 again. So I think you're going to have some real problems. What price do you own this at?
$5.20.
Okay. Well, I don't think you need to do anything today. But I would probably call into the Tom O'Brien show tonight and ask him pointedly. He probably has gone through their books at length and knows how much cash they have left. So is there a chance of getting your $5 back yet? I don't know because I don't know the finances that closely on whether or not they can run through all their cash and be broke before the gold market turns around. And I think he'd be better at answering you that question. But that's the question you got to answer right now. Is this company, let's say gold goes to $1,800, but it goes to $1,800 in 2 years. Are they going to still be around? Because basically it costs them exactly what they can sell it for to get it out of the ground. Don't they just close everything down and do nothing? I mean, that's basically what happens in commodities. That is, it goes to some astronomical price that's unsustainable. Then it goes down to the core price of production at which people quit either drilling or mining it or making it. And when enough people get out of the market, the price comes back up and the people that are left make money. And the question is always in those, which one of those companies is left over? And this one doesn't look like, that it's going in the right direction or strong or any of the other things that you would like. At $5, when did you buy this?
About a month and a half ago or so.
Okay. So would that have been back in March?
Yes, sir.
So when this thing was running up?
Yes, it was. And it was always correcting and going back about it. It was the subject of candidates for a takeover.
Yeah. That's a lie. It was probably never a candidate for a takeover. You have been scammed by some of the best. Normally, when you really hear of a takeover, it's going to be like a thief in the night. Sometimes they leak, but today almost never. I'd say 10 years ago, maybe you saw that happen, and that was because the penalties for releasing that information were a great deal lower. Now they are extremely high. The chances of you actually hearing that and it being true are extremely low. So, you know, one of the things you're going to need to do, and I'm not going to tell you to do it now, I'm going to tell you to think about it in the next 24 hours, and that is at least put some kind of stop in this thing so that you stop the hemorrhaging. I don't know if it's at $2.50 or $2.25 or where you're going to just say, hey, I would have sold it there no matter what, and get that stop in so at least you don't ride this thing all the way to the zero mark. But I don't think you're going to get any more out of it probably in the next few days than you're going to get in it in 2 months. But I think gold's going to 1180, 1185, and at that point you're going to find out if it even goes lower. One of the problems gold has these days, and I've been talking about it on the show, is the new election of the Indian Prime Minister. Mm-hmm. And with the ability to let gold go to fair market rates, gold was selling in India because you could only import so much of it for a couple $100 more than it was going for the rest of the world. When the Prime Minister basically took office and said, hey, I'm going to drop that down, a lot of people in India have been selling their gold because they know they're going to be able to buy it back at fair market prices, a couple $100 cheaper. So I think there's enough gold on the market out here, and what we've seen from about $1,300 to today is just as more and more people in India are selling their gold out into the most strengthful part of that Indian market, which is normally what, August, something like that, August, late July, August. And I don't think you're going to see that until that Indian market really stabilizes, which I'm thinking it's going to take another couple of months. I think you're going to see gold under pressure.
Do you have time for another question, please?
Sure.
My other question is about UNG. In the past, as I recall over a year ago, you used to say June, May, and October you don't want to be in the stock.
Yeah, this thing's probably going to be weak until mid-July, till it gets hot again, and they need to use it for production of production of electricity. One of the things you have different happening this year is I think it's the middle of June or the first week of July, something like that. New, really draconian EPA regulations come online, which means that you won't be able to burn coal anymore in a lot of those plants. And a lot of the standby plants, when you really needed a lot of really quick power, especially in the summertime when air conditioners are kicking on, that's going to, even the main plants are going to be switched over to natural gas if at all possible. And I don't think that can even be done enough. They've been blocking the movement of pipelines for natural gas because basically a lot of Luddites hate any energy whatsoever. They'd have us all living in caves. And they're willing to shut off coal, but they don't want us to have natural gas. They don't want us to have nuclear. But the question is, can they get that additional natural gas to market and get rid of a lot of the huge amount we have in storage? And that's probably not going to happen until late in July, first part of August. So I would say that you've got a market that's probably, right now, probably at least in UNG, somewhere around $23.70 and probably $26, and probably going to trade in that range unless we have some kind of huge hurricane or something like that in the Gulf. So I think you'd want to look at this thing again probably in August for a long-term play, if that's what you're looking at. Maybe September, if that's is that what you're asking?
That's what I was asking also. I could trade it.
Yeah, you can have some bumps that are tradable, and then those bumps are going to be whenever the heat hits in the Midwest, because a lot of that is prime natural gas territory, and they'll use it for generating electricity. But at the same time, you've got to figure out that that can be over in a week or 10 days, and then you come back. But yeah, you're probably going to see some kind of low, I would say late August, first week of September. And then that's going to be when all these plants have probably been turned over, as many as possible, to natural gas. And you're going to have a lot more of it being used to generate electricity this year than you did the year before. So I think, you've got a nice movement out here. This thing's broken out, but you're in a narrower trading range of 2370 right now. I think you could see 2250, maybe 1st of September or something, and that may be the buy.
Thank you very much. It was very informative, and you helped me a lot.
Yeah, you call Tom tonight and ask him basically how much cash A&V has, and whether or not if they just quit mining and sat on their cash, could they still be around, when the thing turned around. But you'd really need a huge move in gold right now to save this company, I think. Okay?
Thank you very much for the great programs. Thank you.
Bet.
Bye-bye.
Bye. And we got somebody typing at me here. Maybe I'll type it. Maybe I got another caller. But they're slow typists. Oh. Yeah, no, we don't have. Okay. What else do we have out here? Okay. Wanted to look at some other stocks here. We'll get back in gear and thought. I was looking at the market real quick just to make sure what was happening out here. And we're up 7.5 points now with 1.84 billion shares. So a slight move up in the markets here. But interesting move. Let me see just on a couple here. What a couple of my positions here, how we're doing. Okay. No big deal yet. I'm actually down 17 cents on one of my shorts, so not down, but I mean a short is still down 14 cents. So not a bad day to see the S&P up 7 points and mine down. So we will see. 1191 tick in the den. We're seeing a lot of people trying to push this market up, but no volume so far. Anyway, Booz Allen Hamilton, BAH, interesting stock. Having a little pressure back down. If you don't remember the name of this company, this is the company that was and did employ Snowden, the guy of the NSA security leaks. He's been on TV last couple of nights. Down on heavy volume today, down on heavier volume, and it hasn't come out and hit this low on $21.55 for May 21st yet. But my guess is we're going to get and see into that. And, of course, volume very strong today. I didn't look at the headlines at it, although I will right now. Booz Allen, it is, we're going to look at it through the break here. 10 million shares of its common stock by an affiliate of the Carlyle Group. You got those Carlyles selling Booz Allen, and that's what's the deal on it. Anyway, we're going to come back and look at a few more of these stocks before the end of the bell and before our own huggable commodity guide.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
And we are back. We're printing $80.53 on the dollar index, so dollar pretty much hanging up here. We're off basically $5 on gold. But we're certainly going to work our way down to probably that 1227, 1230 level on gold. I imagine it's the next stop. And I think we're going to break through that. And I think that 1180 is probably going to act like a magnet and wash out a great deal of traders, as per our previous caller. So we will be looking at that. Anyway, a few other stocks out here of interest. Biodyne, IDEC, BIIB. Watching some of these biotechs that have been kind of slammed down break the last or the first, as I would say, automatic rally. That is a rally off of the first leg down. You really don't have a good idea what it's going to do. It happens without preparation, and you don't really get a lot of information until you go through that. And we certainly got that. And Biogen IDEC, 272 to $311 on April 23rd. So you come back down on April 28th, back into that candle, the heavy day candles that had 2.7 million shares at their highest. We had 1.8, and this thing's slowly been moving back up. But what we wanted to do is look at this movement on, which had 2.5 million shares at 311. We went through that today, and we've got 1.3 million shares, so we're going to call that 50% right now. Let's say that the thing gets 60, 65% by the end of the day. What can we do? And my guess is that we're probably going to be looking, and what this is doing is going back into these huge candle down days. In this case of Biogen and a lot of these biotechs, that's the 321 huge move down on March 21st. That day, of course, 5.7 million shares, almost 5.8 million shares. So coming into it with 1.3, not doing us a lot. The bottom of that candle intraday on the close was 318. We're in it now at the high today at 319. I suspect that if we go back and look at IBB itself, you're going to see the same thing. That did it blow through the confluence? Yes. Did it do it on any kind of volume? The answer is no. In fact, it was banging around that 234, 235 level for a while and really didn't do anything. And as it went through it, did you get a sign of strength? No. Have you had even more signs of weakness? The answer is yes. I just think we're probably seeing a little of these companies that have highly short stocks pretty much pick off some of the low-hanging fruit in shorts. And you really don't have any more energy than that. And we're up 8 points on the S&P cash, 1.9 billion shares on the New York Stock Exchange tape. And that's about it. Let's see if there's anything else. Michael Kors kind of coming back down. This one's just in a higher trading range. Looks to me like you want to see at least the top of this big gap tested one more time. And that gap is about, goes from about 75 to 86. I'd love to see this thing tested back down into probably about 78 and fill that gap. But today, long candle on the wrong side of the market. Volume kind of picking up previous to other down days out here. You had a nice kind of up volume day yesterday, but kind of getting it negated out here today. I think this gap is about ready to get covered there. And again, hang on. Our next show coming up is Andy Heck, and he's going to talk all things pork bellies. More pork bellies. And of course, Tyson. All those food companies going at it. See you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.